today we're just going to look at the market review basically, and it's going to be a different one. It's going to be more of like a analysis in knowing when not to. And today's a prime example of price action can move, and there's not a lot of stuff that is high quality. So those who are in the PDF game, I suggest you pull that up, and I'll reference stuff in there. But I want you to notice, screenshot today's price action from the higher time frame to the lower time frame, and don't look at it in the lens of here's how I could trade it. More look at it through the lens of how can I avoid something like this, and why do I avoid it? Right? So we'll go to the higher time frame. We'll go to the hourly chart. We've got this clear market maker buy model we're finishing out. We left original consolidation below this right here. We're near all-time highs. Actually, that's kind of impressive. Near all-time highs, but we've got the buy side here resting, right, just to complete the market maker buy model. This is also below a higher time frame PD rate. I believe there's a daily or a weekly imbalance above here. So as we reach up into that, that's going to be the short-term draw. So preferably bullish going into the day, just reaching up into that. Now it's kind of hard to say, okay, right at the New York session, would you continue to be bullish going into it, or would you look for an ERL to IRL move? So whenever you're collecting data, it's very, very important to not look at things. You want to look at things with perfect hindsight and be like, okay, here's you want to mark everything out perfectly how it shows up, because then you can learn the skill of when it shows up in real time. This is exactly what I've seen before. I can use this kind of entry, right? But don't fall into the trap of looking at price action and being too dialed in of like, how do I trade every single day? Or there's obviously a move every day, but just because there's a move doesn't mean you can always trade it. So it's beneficial in sometimes looking at price action like today and knowing and being confident that you can skip something like this. And I'll show you exactly why. So, even working from the higher time, lower time from the bias here, sure, you were bullish maybe going into the day, but as we open up here at 9 o'clock, we just swept the buy side. I would argue that's kind of a difficult bias, right? We're maybe sweeping hourly ERL. Are we now going to rebalance that the new day opening gap? Are we going to go into like a 4-hour imbalance? Or are we going to continue up and go for this high? That's kind of a hard decision to make. Obviously, you could use order flow, and until there's a reversal signature, you're going to assume we're going to continue, right? So just because we're piercing the buy side, you don't instantly look for shorts. If the order flow going into the open is still suggesting a bullish move, I would rather do that than try to anticipate the reversal before it happens. So that's one thing, is like bias is kind of iffy on this day. And you could even look at, okay, if we had a bullish bias and we go into the profile for today, if you look at the profile, those who have seen the part 2 video of the advanced time guide, and if you have access to the PDF, you know that this is public knowledge, so I can share it, but preferably on meaningful manipulation, it's got to be an hourly time frame PD array or above, and it's got to be an imbalance or sell side liquidity if you're bullish, right? So it's got to be an imbalance or liquidity below the marketplace at midnight open that we're manipulating and leaving. This is an example where you have an order block in this case that we're trading into, and that's the meaningful manipulation. And technically, the low here is formed at 1 o'clock, so it's not the end of the world that we have this kind of misalignment in time. Obviously, you still got the displacement away. You still got the rebalance here at 5 o'clock, tagging into the bullish order block and the inefficiency. You still have it leaving going into New York open. So you could still be bullish going to the open, but there's discrepancies here. It's difficult. It's not exactly perfect. It's not exactly what you're looking for compared to something like potentially tomorrow, where you're going to have much easier time finding a draw on liquidity and a much easier time finding precise elements in time and price. So although this is a bullish PD array and we're tapping into it, it's not the preferred easy low-hanging kind of visual representation of what you want to see. And if we drop down to a lower time frame, we can look at surrounding the New York session, right? We've got multiple different things that still exist. There's still always going to be the dynamics there that you always want to see. It's going to be harder to spot. That's the point I'm trying to make. It's going to be harder to spot, and you don't need these days. You don't need to make it harder than it's supposed to be, especially if you already are only trying to trade 1 to 2 times per week. You don't need these days. because you have a more likely chance of taking a loss. You have a more likely chance of doing something stupid because of a poor loss, because you were breaking rules. And removing that opportunity altogether is something that sometimes you have to find out by yourself. But if you take the advice of other traders and be like, okay, this is something that, from what I've seen through 3 to 4 years of price action, I know this is not a kind of day that I want to trade, because even if I do take a win, over the longevity of it, it's more likely than not that I'm setting myself up for failure. We have no news today, or on Wednesday, right? We had no news. Tomorrow, Thursday, we have 8:30 news. So that should already set up for you of, okay, it's expected to be a swing to Z day or some sort of consolidation or accumulation going into the news. Even more of a reason why you wouldn't even look at it. And being confident not looking at it because you know there's going to be a setup on Thursday. So in here, I want you to notice what time the low of the day is formed at. I want you, for the PDF gang, I want you to also look at what time the low of the session is formed at. You can do your doubling theory time estimations on when the hive is going to be formed and how that relates to the draw on time. So those are things you can study. But then look at, individual dynamics. You're expecting something like SMT to form at a session low. So in this case, New York is expected to expand, continue and expand. So we're not going to form the daily low. We're going to form the session low. But at these key areas, you still want to see SMT. Where's the SMT here? You can pull up the 15-minute chart between ES and NASDAQ. I'm not even going to look at why I'm on a low probability day. There's no reason to. You look at 930 and you go, okay, 930 here dipped down lower than it did on NASDAQ. Sure, so you have SMT between the 915 and 930 candle. That's not preferred. You got to see it preferably on a 15-minute chart. Do you have 15-minute PD array SMT with NASDAQ and ES as well? This is not, is this a swing low? Let me check. 61,175. It's even. So it's not even a swing low. You have a gap here. Is the gap the same gap present on NASDAQ? No, there's no gap here. So this kind of SMT, although it exists, it's very difficult to spot in real time, right? I'm looking for, like, preferably it's got to be that swing low. I want to see manipulate this swing low, maybe on one of them, or an imbalance, and there's two imbalances there, and it fails to drop into that. This is hard to spot. You can go to the 5-minute and be like, oh, there's this SMT, but are you going to be able to see that in real time and feel confident taking it long at 930? I'm going to say no. I don't think I can see that in real time and be like confident right at 930 as we have SMT that I'm going to go long, right? So there's that. There's also this manipulation prior to 9 o'clock, or 9:30 rather. So you rarely will see this where we kind of are manipulating at 9. We had no 8:30 news. And it's this, in my mind, this should be 9:30 right here. Or maybe this should be 9:30 where we're dropping into it. And then maybe at 9:35, 9:40-ish, we start the reversal. That's what I prefer, because I know that 9:30 would be the low of the session, and we're going to continue up from there. So difficult to spot daily bias, difficult to spot on a market profile, difficult to spot on a manipulation aspect. Same thing with the SMT. And then the entry, right? You've got maybe at best this SysD retap at 935. I would have liked if we traded into the fair value gap there, the BISI. So that would be one. And it's easy to say that with hindsight, or even maybe this SysD, but I like this one a bit better. But then look at the 1-minute chart. We know that on a non-news day, preferably, you want to be utilizing macros, right? And for those in the PDF gang as well, study the Swing to Z chapter. That's a very, very good chapter to look at. But look at the reentry. You got to tag into here. You could argue, okay, you're going to use this BISI. That's not the right time for me. I'm looking at 950 to 1010. Drop into here, the BISI 1-minute order block tags into it at wrong time, 946. It's still a valid entry for some. That's not the model I'm looking for. And then as we continue up into macro time, we don't have any clear 1-minute for value gap we're trading into. You have this 1002 candle that's spiking down. Imagine if you got into an entry long there and you see this candle. That's for sure going to stop you out, I would imagine. This to me is kind of a difficult read. Like if I was imagining seeing that print in, all right, we go back to replay mode. Maybe we say, okay, there's a 5-minute gap, maybe in here, that's not in discount of the dealing range. It doesn't touch a 5-minute order block, nor is there a breaker. You could argue there's a mitigation block there, but as the candle comes into print, that's going to probably spook out a lot of people, and it's hard to trade that. Um, you could say, okay, you do have a 5-minute mitigation with a 5-minute fair value gap. Do we even wick into it? 21,976, 21,976. Yeah, you don't even touch the fair value gap. You touch this one, but that doesn't pair with the gap. It doesn't pair with an order block, I mean. So that's difficult. The draw on liquidity, you can argue is harder because there's not a clear 1 hour buy side in the form of previous day high or London session high or anything like that. So you're kind of just blindly holding, in my sense, in the sense of what I'd be looking for. I mean, prolonged consolidation, sharp reversals, taking out stops internally. That's high resistance liquidity signatures where you have this chop and then it comes down and takes a stop. A lot of people are going to look at this as a market structure shift, or even this as a market structure shift, and you've got a fair value gap there. So people are going to look to short that. I don't want to be in this kind of trade. If I'm trying to hold long from here and I get these multiple, I know I'm going to trim my stop to this. I know I'm going to trim my stop to there because on a high probability day, we have these fractal market maker buy models. As soon as we take out that high that started the retracement leg, I'm placing my stop there and I'm not worrying about it. But then if you play it out, we just completely eventually will trade through this entire thing into lunch. Study this, by the way, too. But that's not, it's important to point these out because everyone can go into market replay and everyone can go into to do market reviews on a high probability day and look at this. Obviously you can do that. And I suggest you do that as well because you gain a lot of benefit from it. But don't skip out on these days either. And notice the benefit from them. Because if you can see these days and you contrast them to the high probability days, go back in and look at Wednesday of last week. After we had CPI, look how beautiful the price action was. It was perfect. It was beautiful. You had a drop down to 930. You've got a SysD. You've got a fair value gap. You had 3 fair value gap entries that were high quality after the reversal point. You've got a nice draw on liquidity on the hourly chart. You've got a nice draw on time. You've got a bunch of these concepts that work perfectly on those days. Order blocks being respected, fair value gaps being respected. You don't have to worry. And that's the main thing. So if you study these days as well and you pair them up with okay, look how this day prints. Look how sloppy it is. Look how maybe tomorrow prints. And look at, okay, can I find a setup on that day? And it's very easy then to siphon out these kind of days. And if you don't choose to look at it, if you choose to not trade it, you can be confident, right? You don't want to be just not trading a day just because I say not to trade it, or I'm not looking at it, I'm not streaming. Oh, don't do it because Flux said it. That's not the thought process I'm trying to invoke as a mentor. It's more of okay, if someone else feels confident in not trading it, you should ask yourself why. Why is it that I have not streamed from Monday, Tuesday, or Wednesday in the morning? I'm just not interested in those days, and I can feel confident knowing that there's going to be a setup later on, even if it's not high probability. I would rather be trading on an 8:30 news than on a Monday with no news, or a Tuesday with no news, or a Wednesday with no news. And even if I take a loss tomorrow, I know that's still within my model. It's just variance. I talked about this yesterday on the psychology stream, but you have to completely detach yourself from winning and losing because they are random. The distribution of wins and losses within a given model is always random. I don't know which trades are going to win. I don't know which trades are going to lose. And that's kind of hard in the beginning to wrap yourself around of okay, you obviously are trading to win, but you don't know which trade is going to win. You don't know which trade is going to lose. Simple as that. So you cannot make decisions based on that. You cannot base your personality around that. You cannot base your trading success looking at outcomes of a specific day. I gave the coin analogy flip last time, the coin flip analogy of if you had a weighted coin, right? And that coin was supposed to land on heads 80% of the time. Are you going to worry when it lands on tails? No. You're not going to flip the coin once and it lands on tails and you take the coin and you blow it up. The coin's not broken. It's your mentality of your perception of the losing. You're looking at one coin flip and thinking that's going to dictate your entire trading career. Or you're looking at one trade and thinking that's going to dictate it's not going to. You have to think with the longevity of trading, and you also have to think of, if I have an edge, If I take one loss, you stop thinking. I could go on for 50 minutes like I did yesterday about psychology, but that's why it's so important to look at these days and gather the data and not be negligent in your data collection, because you have to look at these days with hindsight, sure, and be like, okay, it's still, everything in here is still, it's playing out, right? We had SMT at the low, we had a nice profile, we had nice strong liquidity, we still have entries, but it's not as clean as it should be, and the entry times are difficult, and you have these larger wicks, and you have stop runs. You're not going to be able to hold through that in the beginning and feel confident that you still know exactly what you're doing, right? If you're properly managing your stop loss, if you're properly, as you progress, you will be able to trade these days. Like, no doubt. Obviously, when you get enough data and you anticipate it's going to be a low probability day, here's my protocol for trading that. You will be able to, but what you'll find is, if you have the opportunity to trade high probability days and low probability days, I would rather save my mental capital and save my physical capital and save my chances of losing and just not trade those days. Because I know over the long period of time, those days are not going to give me exactly what I'm trying to look for. I may have to only squeeze out a 1-to-1, or maybe only squeeze out a 2-to-1, when on other days you may be on averaging 2-to-1 or 3-to-1. So it's like, why would you even risk that and change up your model or change up the kind of trades you're taking just because it's there? So just because the market is open, just because you show up, you're not owed anything. You're not owed a trade. You're not owed a take profit. You're not owed a win. You're there and you have to become process focused. There's only so much you can control. There's only so much you can do, and you have to focus on that stuff, right? In my mind, I have to set myself up to even look at the chart on a good day. Okay, so I'm only going to look at these days, these high probability days. Okay, check. That's process oriented. Then I have to find a clear bias. There has to be a clear bias. I have to know where drawn liquidity is. For the most part, you're always going to be uncertain, right? It's not a thing. You cannot be certain in this market. So if you feel like you're worried about your drawn liquidity being wrong, that's normal. Like, every single time I'm finding a bias and I'm finding a drawn liquidity, I'm not certain. I just know with a great deal of expectation that from what I've seen, this is likely to play out. And I'm going to take those chances. It's risk. If you can't accept risk and you can't accept being wrong, like, it's part of the game, right? Um, so it's, if I can set myself up on a high probability day, and then I can find a good bias, and then I can take a trade that lines up with my execution, lines up with my entry model and what kind of risk I want to use. That's it. That's my job. My job is to show up, decide if I want to take a trade, and only take a good trade. That's it. I can't control the outcome. So worrying about the outcome and worrying about that kind of thing is a very early mind, and that's how this algorithm is work. How the algorithm works and how the markets work. It's always ran on that basis of fear and greed. And fear and greed is worrying about the money and worrying about winning and losing. So as much as you can try and detach yourself from the winning and losing aspect, not because I say it or not because that's what you're supposed to do, but rather because there's a reason. It's because variance exists. You can't trust winning and losing. So you have to anticipate it. Give me a sec here. Someone's calling me. You have to anticipate losing streaks. You have to anticipate winning streaks. You have to anticipate the back and forth. So if you know, okay, there's only 3 options. Like, I'm either there's only 2 options. I'm either gonna win or lose this trade. Okay, if I win, great. If I lose, I have a stop loss, and if I have risk management. And you got to just fall in love with the process. You have to fall in love with becoming a trader. Your job as a trader is to take good trades and manage risk and manage drawdown. That's it. It's not to win. It is not to win. The winning will come. It's a byproduct. Elon Musk is he's focused on becoming the greatest, engineer, or having the best car company. Amazon was focused on having the best book selling company. Jeff Bezos is a multi-billionaire as a result of it. He's not worried about them. You think he was going to be like, how can I make the most amount of money? No. Or Steve Jobs. It's always they're focused on how can I create the best product? How can I set myself up for success where then I can attract those kind of things? I can attract the winning, right? That's just it's a byproduct. You're obviously going to take losses, and your job as a business owner as well is to fight problems. Problems are there to be fixed. And as you fix a problem, you move yourself one step closer to success. So approach the problems and welcome them in. You're supposed to have problems because at least you're doing something right, knowing that, okay, here's a problem. I got to fix it. I'm one step closer. And as soon as you fix X amount of problems, there's your profitability. All right, there's only so many problems to be fixed. And you can either fix those problems through experience or you can gain experience through other people. So those who, go back and watch and listen to the psychology streams and go back and do diligent data collection on themselves of actually journaling before, during, and after, and reviewing your journals on Saturdays or Sundays. That's the kind of work you got to be putting in because you'll advance much quicker than other people will. And if you put in that work, it will come. It's guaranteed to you if you do the proper work. All that to say, is a longer stream than I wanted to, but quick market review. Obviously, there's still trades in it, but to me, this is noise, and that's kind of the mindset I want people to view this as. Is the days that there is no high quality trade setup that's within your model, it is noise. I don't care if it's the New York session, it's noise, right? I don't go into I don't go into London when I wake up at 9:30 and be like, oh man, we moved 70 points here. I could have traded this market maker buy model as we dipped into it during the 250 macro. Like, that's great, but it's not my model, so therefore it's noise. So just because you show up at 9:30 doesn't mean you're owed a setup. It doesn't mean that you're, you know what I'm saying? So even if it's the New York session, it's still noise if it's not your model. And sometimes it's best to just not even open up the charts on these kind of days and just know that, okay, even if there's a good setup on this day, I'm not going to worry about it. That's the kind of confidence you want to have, where you can sleep in, where you can go do something else, where you can go to the gym and not even look at the charts and know you're not missing anything. Because even if there is a setup, it's not yours, right? Because obviously there's going to be days where you decided to skip out and then you come to the charts and there's a really, really high quality setup. But you have to think with the longevity aspect of, okay, just because there's one setup here on this day, you can't beat yourself up over it and be like, oh, this is an exception to the rule. Now I'm going to start trading on low probability days. Because over time, you're going to lose more than you're going to win on those days. So you have to obviously use hindsight, but you have to be wise about it. You have to be very wise about using hindsight to create a model, but then also looking at it through the lens of, how can I stay in this game and survive? The goal is survival. It's preserve capital first and then grow it. So you gotta have defensive plays, you gotta have offensive plays. This is an example of a defensive play that I suggest most people, if you use my kind of concepts, if you're in the PDF group, if you're in my private group, even if you just enjoy the public content that I post, this is a day that I didn't even open up the charts until around 12:30. I literally did not even open the charts until 12:30 just to see what we were doing and just to see, okay, where did we even go, so I can kind of help frame a bias for tomorrow. But be confident in that, because good traders, you're not trading every single session. You're not trading. Some people are not trading every day. Some people are not even trading every week. It's just waiting like a sniper. You're not a machine gunist. You're just a sniper. You got one shot. You got to make it count. If you miss the shot, at least you set yourself up for success. So you got to wait for those high quality setups to form. Be patient enough, and patience is just something. It's not really something you can kind of just develop off of nothing. Patience has to be based off of confidence. So you have to have data collection. If you're just showing up at 9:25 and watching it until 11 o'clock and then leaving, you're shooting yourself in the foot. It's not going to happen. Meanwhile, if you have the data to be like, okay, this is a day that I don't need, I can be confident in sitting out. I can be confident in not taking a trade. And I know that, like, you can go into the economic calendar for next week and be like, here are the days that I want to show up. And I know at these times, my model is going to be there. Like that's the benefit of having a time-based system, is knowing that on these days of the week, at this exact time, there's going to be an entry. That's so powerful. That's so powerful. And people don't realize that because we're all kind of privileged as ICT traders, where we just kind of use time as it's like a back seat. Like you don't even pay attention to it. But if you know, okay, like I'll give you an example. Like next week, let's see. I'm gonna pull up Forex Factory here. Next week, we've got no news on Monday. We've got 10 a.m. news on Tuesday. Wednesday, we have FOMC. Thursday, Friday, 8:30. So I know Thursday, Friday at 8:30, there's going to be setups. And I know on Tuesday, there probably is also going to be a setup. I know on Thursday and Friday, since we have 8:30 news, I'm going to look at 9:30. I'm going to look at either trying to get an entry at 9:30 or I'm trying to get an entry at 9:50 without even seeing the price action. You can go into the next week and be like, all right, I have to show up at these times for work. If there's a setup there, if there's a clear bias, it's a high probability today, I execute. That's where you stop thinking. You put your stop loss there, you put your take profit there, and you stop thinking. Because if it's a win or loss, you have a protocol to follow, and you follow that protocol. And that's as much as you can control. Right? So, I mean, you can go on for analogies for days about kind of worrying about the things you can control and not worrying about the rest. Winning and losing is not something you can control, so therefore there is no validity in worrying about that. And it's such a deception, like a deceptive idea, because everyone, everyone on Twitter, everyone on YouTube, everyone even in here, you see wins, and people who are new will look at that and be like, oh, this is only what people do. Good traders must never lose, or good traders must, if they lose, it's a break even, or it's impossible. Everyone loses. It's part of the game. Accept that it's part of the game, and accept that your job is to manage drawdown and anticipate those losing trades, because variance, that's it. It's just variance exists. There's a random distribution of wins and losses. So as much as you can, position yourself up to win. Avoid the days you don't need because you have data and confidence to back it. Execute on the days that you can. Not because it's guaranteed to win, but because you're setting yourself up for success. I showed the diagram yesterday of, if you continue to do the things that you're doing, I'm not talking to anyone specifically, but I'm saying if you are having a hard time in this, you know what it produces. You constantly blow accounts, you constantly do this. It's just constantly providing a losing scenario. Your other opportunity is winning and losing. So it's not just winning and losing. It's just you either lose entirely or you lose and you win. And the only way you lose and you win, to give yourself the opportunity to even win, is by following your own advice, following other people's advice, and following your system. This line here, this red line here, that's your process. You have to worry about this, because it's a computer program. If you put the right input in, you'll get the correct output. If you constantly click run program, it's constantly giving a losing trade or multiple blowing accounts, and you're not changing anything, you're going to continue to get the same outcome you always got. So it requires reflection. It requires cutting out negative days. And that's why I say on stream, and that's why ICT said it before, knowing when not to is better sometimes than knowing when to. So if you can preserve your capital by not even taking a trade, it's so, so powerful. And it was a lesson that I didn't learn until later on. It took me like 1 to 2, probably 2 years really, to even look at that and be like, okay, this is a day I don't need, because I'm confident that on this day I have a good setup. It took maybe 2 years to learn that. So if you're either 4 years in, 5 years in, or maybe you're just starting off, use this as a good exposure therapy to, you don't need every day. And if you can figure out earlier on what days to skip and be confident in skipping those days, it'll do so much justice, because you can sleep at night, you have a better mental capital management, you have better physical capital management, and you're just confident in yourself. You're confident in your execution. And as you get more and more confident, it's just such a easy game to do, because you have a very simple job. It's just to show up and do the same thing over and over again. It's a job. You get paid to just show. You don't get paid to show up. You get paid to make the right decisions. That's it. right? It's like if I told you I'm going to pay you $300,000, all you got to do is you got to show up, you got to take a good trade. If it's there, if it's a bad trade, or if it's a good trade and provides a loss, I don't care. I'm still going to pay you $300,000. That's what trading is. It's like win or lose. If you know what your RR is and your win rate, it's all hypothetical and theoretical, to be completely honest. But if you have a good understanding of the markets and of yourself, it just comes down to a numbers game. It's just an upward curve that obviously has fluctuations in it. It's always going to be this, right? So all that to say, tomorrow there will be a tape reading stream in the morning for the private group. So be on the, obviously, Lord willing, be on the lookout for that. Probably have a stream on Friday as well with the PA, just because we've not had it. Actually, it depends on Friday, depending if the price action is good or not. But expect another backtesting / Q&A session. This will be posted up into the YouTube vid section after the fact. And then I'm forgetting something. Oh, the PDF sale ends in 9 days, 10 days. So pick that up. I promise you, it's such a good, like, I'm not even gonna, you can ask anyone in the group. You can look at the reviews. It's all 5 stars. Everyone who's had access to it, it's way more value than what the listed price is. So 25% off until January 31st, I believe. So if you've not picked that up, if you got questions, you can reach out to anyone in the PDF gang. If you got questions, you can reach out to me or any of my admins as well. And that resource is available to you. And I highly, highly suggest not wasting the opportunity. So all that to say, take care tonight or in the morning, or I mean this morning if you're somewhere where it's morning or afternoon. Take care of yourself. Do the things that are necessary to succeed. And I will talk to you guys soon. Peace.
Where do you come from?
Another galaxy. You know they're out there. You know they're out there. You know they're out there, don't you?